Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so roughly for 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us right here via our chat room or via Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to hear your feedback. In the lower right portion of your screen, you should see a How'd We Do section with a link to a very brief one-question survey. We'd love to know what you think of today's show and, of course, any suggestions that you have for us going forward. For those of you joining us today for the first time, welcome to the show. And for our regulars, welcome back. Just a couple of quick announcements before we get going today. Today is Everything Stock Charts, and we will have President Chip Anderson here to join us in just a few minutes to give you some updates in that regard. On Wednesday, Mark Young, he's with wallstreetsentiment.com. He'll be joining Aaron Swinlin on Market Watchers Live Wednesday, and I'm sure they'll have some very interesting sentiment information for you. There will be no Market Watchers Live this Thursday or Friday for the Thanksgiving Day holiday, so we'll be back in action on Monday. I will not be back on Monday, however, so Greg Schnell will be subbing for me, and he will join Aaron, so make sure you have your questions ready. I'm sure Greg will be providing everyone an update on gold and oil, among other topics. Next Wednesday, mark your calendars, I will be doing a segment on trading strategies with the MACD. So if you're familiar with the MACD, you might find this really interesting. And if you're not familiar with the MACD, I think you'll find it very educational. And finally, on Friday, December 1st, that's next Friday, Julius de Kempenaar will be back for a return visit, and he will provide us an update on those RRG charts. So make sure you're available for that as well. And with that, I'll bring in my co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well. I'm looking at, I know we talk weather a lot, but this week is just crazy for Southern Cal because we're going to hit record-breaking temperatures. We're, for today, actually, the record high was 88. We're going to be up at 94. On Thanksgiving, wow. The record is 86 degrees, and we're from 1968, and we're going to be up 10 degrees ahead of that at 96 on Thanksgiving.
So you don't even have to grill the turkey. You just set it outside.
Exactly. Just put sunshine on the grill. There you go.
Well, matching your record highs is the Russell 2000, which is broken out to another high today. Story in itself, and we'll be getting into that in just a little bit. But before we go any further, let's bring in the president of StockCharts.com, Chip Anderson. How are you doing, Chip?
Hey, we're doing good here.
Awesome. I know you got a lot of great information to share with everyone today in the Everything Stock Chart segment. And we're going to be getting to that in just a couple minutes. I don't know if you have anything that you'd like to just tease everyone with before we get into the update.
Nope, we're going to be going over a bunch of new features, and I'll be showing you the typical way that I use stock charts to find great stocks.
Awesome. All right. Well, I'm not going to take up too much time. I'd like to go ahead and bring Aaron back in. And Aaron, you can go through the agenda and give us that first market update, and we'll get on with the rest of the show.
All righty. Well, we are going to do market updates on the half hour, 12:05, 12:30, and 1. We do have that everything stock chart segment first with Chip Anderson. Then we're going to look at some chart breakouts that we've seen this morning so far. Tom and I will show you a few charts there. 10 and 10 to 1. The first one we're going to do is Intercom Communications, ETM. But I need symbol requests for the other 9. So if you want to take notes on that first one and see if you agree with Tom, I would say go for it. What would you do is our final segment, and we will be presenting you with a situation and chart, and we will ask you what you would do, and then Tom and I will tell you what we would do. And the tease is that Tom and I don't agree today, so that'll be interesting. Mailbag and wrap up to finish off the show. And with that, I think I will go ahead and move on to our first market update. All righty. Let's get this going. All right, I'm going to start with our candle glance, and you can find that right from your member homepage here on the right, the left, my other right here. Okay, here we go. So what's been going on in the market today? Really interesting day, I would say. We've got the markets have gapped up and now are starting to finally consolidate. There's that Russell 2000 that Tom was alluding to earlier. We did have pretty much straight up rally for the morning, but now we are seeing some consolidation sideways. We've got Wilshire 5000, same deal, gapped up, moving sideways now. And when I look at the treasury yields, we had a really difficult morning as far as treasury yields. They were down quite a bit, but they've recaptured most of those losses into some gain. But we're reading at 23.67 currently for the treasury yields, 10-year treasury yields. UUP moved down quite a bit. Looks like it's now starting to form a double bottom. So we'll have to keep an eye on that pattern as we progress through the show. And you can see USO, we had a nice rally, but it's pulled back quite a bit and is now consolidating right around $11.33. Gold gapped up, but is now traveling completely sideways. We'll have to see if it can get much higher than the 121.75 it's at currently. VIX is falling. We're now looking at readings below 10, which we haven't seen in quite a while. So a lot of comfort out there with this rally, and advances leading declines currently. I'm going to take you to our member homepage once again. We're going to look at the market summary. I want to give you an idea of what sectors are the leaders currently. So we'll just scroll down here to the sector spiders. As you can see, technology and healthcare are our leaders. Not a surprise when you see the NASDAQ doing as well as it is today. We have utilities and energy are the laggards, but they're still up, with financials up 0.25% right now. And with that, I'm going to finish our first market update and pass it back to you, Tom.
Sounds good. Yeah, just a couple of comments before we bring Chip in. First, there was only one economic report out this morning, one key economic report, and that was our October existing home sales. Came in at 5,480,000 units. The market was expecting 5,440,000 units. So we got a little bit of a uptick there, a little bit better than expected. And what's interesting, Aaron was alluding to the fact that the 10-year treasury yield was struggling earlier. This is a 5-day, 10-minute chart. And you can see recently we had some pretty nice support on the yield at about 2.33, 2.335. And that hit that support level right at 10 o'clock when that report came out on existing home sales, better than expected. You can see that the yield has been rising ever since. And what's really interesting is that all of this action is taking place within, let me see, I got a chart here I wanted to show you. A longer, daily chart on the 10-year treasury yield. We've been talking about the squeezing triangle, and you can see right here with the tops coming in here, the lower tops over the past several weeks or few weeks. And then we've also got these rising bottoms. So we're squeezing. So all this information that we've been, trying to take into account and try to determine which way the bond market is trying to take the market to the upside or downside. All of this is squeezing right now in this triangle. So again, if we go back to that individual 10-minute chart, you're going to see all this sideways action really is just this back and forth squeezing in this narrowing triangle. So which way does this break? Well, I don't know, but based on the prior uptrend, normally when I see a symmetrical triangle like this at the end of an uptrend, I look for a break to the upside. continuing that prior uptrend. And of course, any breakout in the yield means breakdown in treasury prices, and that could allow that money rotating from the bond market to fuel another rise in the equity markets. The other thing that I saw as Aaron was going through that update is that all 9 sectors are higher today, and that's really what you want to see, and that's a hallmark of a bull market where you're getting wide participation from a lot of different areas. Specifically, we know technology has been leading this market to the upside, and you can see that the XLK with today's rise is trying to make this another breakout. If there's one warning to be had, it's the fact that your MACD here continues to drift lower. And even though it is turning up now with price, we want to be careful if this breakout doesn't hold. I think if we leave a tail up there and come back down and close below it today, or if we do make the breakout and then simply can't hold it in days coming up, then I think that could lead to some more sideways action, maybe even a little bit of selling. But within the technology space, there are a couple of areas that are doing well. First of all, Apple is having a great day. You can see here Apple is up almost 2%, $3.39, nearing its recent breakout level. And then if you take a look at the index that houses Apple, the computer hardware index, you can see a very similar move. Nice bounce off of that rising 20-day moving average, very bullish action there, and getting up close to that prior high. So I think computer hardware looks pretty good here. Also, internet stocks within technology also bouncing very nicely off of that 20-day moving average, trying to make a breakout as well. And then if we take a look at the semiconductor stocks, this group has already made a breakout, but does, like the XLK, have this negative divergence in play. And throughout this move, since the end of August, this straight up move in semiconductors, this is the first time we're getting a breakout with a negative divergence. So it's worth watching. We'll want to see what kind of volume comes in, see if that shows support and shows accelerating momentum in terms of volume, because price action definitely shows that it is slowing. A couple other comments real quick. One on healthcare. I wrote about healthcare earlier today in my blog, and you can see one of the problems I had with healthcare was that it had fallen below its 20-day moving average, and you can see here that the 20-day moving average had fallen beneath the 50-day. So we've got that death cross, and notice each time we get up to that 20, we've been failing. Today, we're trying to get through it, so it'll be worth watching to see if we can get through it. The other thing is you can see that this double top, when we broke out back in September, notice these pullbacks have been coming back to about 81. And then also, if you connect these lows, you've got a trend line that intersects 81. So we're at a pretty important technical level, in my opinion, on the XLV. So it's nice to see the group moving up to about a 2-week high here. The last two groups I wanted to mention, XLF. This is the financial ETF. I wrote about this also in my blog this morning. You might want to take a look at that. Just talking about this potential head and shoulder pattern. And I say potential because a lot of times these do not materialize in a bull market. Now, this is a topping pattern, so it's more of a bearish type of pattern. It doesn't execute until you lose price support on the neckline, which would be down here somewhere around the 25.85 to 25.90 area. If you notice back here in the summertime, we had a similar pattern, higher price, hit the 20-day, we bounced. And when we went to the new high, higher prices had a lower MACD. Look at what we just did, bounced off the 20-day, moved to a higher price, lower MACD. So we have the negative divergence. We have the neckline. We had a neckline back here in August, and we ended up losing that, and then made a brief move lower to actually reach the measurement from this pattern. So the question is, if we do pull back, do we hold this 25.85 to 25.90 level? I think we will, just because this time of the year tends to be very bullish. I don't see a big pullback at this point, but we do need to at least know that that pattern is in play. A breakout above the left shoulder, I think, would begin to negate this pattern, so that's something to watch for. And the final one was the XLI Industrials, also trading below its 20-day, and we were just getting this death cross, the 20 below the 50, and now we're trying to go back up and reclaim these moving averages, so that would be worth watching as we watch the action later in today. So with that, I'm going to bring Chip Anderson back in. Chip, I know you have some things to share with everyone, so I'm just going to let you take the floor.
Okay, thank you very much, Tom. Here, let me get my screen up. Actually, let me do that a little differently. Here we go. And I wanted to just say thanks. And that was a great introduction and overview of the market, Tom. I enjoyed it. And I'm going to take some time today to show people some new features that we have on the site, as well as take them through something that I do on a regular basis. Those of you who have heard me talk before might have seen this, but it's just a typical way that we want people to be using StockCharts. We think if you're new to the site, or if you are kind of want to get back to basics with the site, I just want to refocus everyone on using the scan engine to find some really good stocks that are out there. But before we do that, I want to cover some neat new stuff. Some of this has been talked about before on your show, but I want to repeat, and I want to kind of put my little spin on some of these features. The new members page has been appearing over the past couple of months. And in fact, it had another big, exciting upgrade over the weekend, which I want to point out to everyone. Hopefully you saw that maybe in our newsletter. This is the new members page. And as you can see, it's extremely useful. You can have a lot of really interesting information, as well as a lot of links to navigate to different areas of the site very quickly. But we can quickly see that the market's been up and moving higher today, which is great. Everything's in the green. Some things are bigger than others. We can look at the Dow, the NASDAQ, the NYSE. And then as Tom and Eric show, you can get to the market summary this way. So that's great. That's the market overview panel. What I really want to talk about, though, is the rest of these panels that are available. Initially, you only get one. And I want to make sure that people understand that you can have many more than one, because it's a very useful panel. And there are lots of information in here, but you might not be aware of all the different information that's in here. The first point to understand is that this drop down here has a lot of different lists that you can pull in our market movers area. The top 10, I think the top 10 NYSE shows by default, but you can have the top 10 Dow, the top 10 S&P 500. If you're focused in another market, you can change it to those. We will remember all of these settings using cookies on your browser. So once you set this, just by clicking like I've done here, the next time you come back to the members page, you'll see that exact same list. As long as you're on the same browser. If you move to a different computer, you'll have to set it again. So that's actually very useful. For instance, I really like to see, what's going on in the Dow. So the top 10 Dow is very, very helpful for me. I can see most actives. I can see percent up. I can see percent down. All very, very interesting. And again, sticky, but it's a little frustrating because this panel is so useful. I want to see several of these at the same time. So to do that, you click on the little gears icon over here, and you click on additional data panels. And if you hit update, now suddenly you have 3 more of those panels available down below. That's allows you to have several different kinds of settings. So if you want to see, for instance, in addition to the top 10 Dow movers, you also want to see the top 10 scooter stuff. You want to also maybe see decision point signals from Erin, her favorite, and maybe you want to see the ticker cloud. Oops, sorry. Here's the ticker cloud. You can just make these changes and pick the most interesting stuff. The thing is, now I've customized my members page, and at a glance, I can see the 4, in my case, 4 very different looking panels with different pieces of information in it, all in the same place. Really, really nice.
Hey, Chip.
Yes.
Just to follow up on that ticker cloud, because we haven't really gone over the ticker cloud too much on the show, and you may have a lot of folks wondering what that is, but that's just requests that folks are, the stocks that have the bigger letters and the more bold. Those are the stocks that have been requested the most.
Yes, on StockCharts.
On StockCharts.
So this is unique information coming from StockCharts. What are StockCharts people looking at? And the way that I use the ticker cloud, it used to be a feature of our old homepage, and now here's where it lives. And the way that I use it is I'm just looking at all the symbols, and are there any symbols that I don't recognize? Are there any outliers? Is something popping that I'm not familiar with? And if so, I want to drill down into it and maybe see what's going on. Maybe there's some news or something else happening that I want to be aware of. So is there anything unusual in the ticker cloud is always something I'm really interested in. Again, one of the key features of the top area of this members page is just simply to give you, or to help you find interesting charts to look at. So again, the top 10 movers are going to have some interesting charts to look at. the top 10 scooters or the bottom 10 scooters, or actually my favorite, the top up scooters for the day. So these are the scooters with the biggest change during the day. What are they up to? And this allows me to demonstrate the next feature that I wanted to make sure you guys were aware, which is our new hover charts feature. So as I hover over ticker symbols in these lists, these various lists, I'll get a candle glance chart that just kind of appears and allows me to get a quick sense of what's going on with that particular chart. That's a really, really nice feature. So hang on, let me go back to my presentation. So these, I wanted to show you the new extra panels on here. So what I've shown you so far is stuff that's been available on the members page for a little while now, for a couple of months. What's new as of this week is a third choice here on the gears box. If you click on the gears box, you now also have the ability to add chart list panels. And you don't have to have all three on at the same time, but you can, which is what I do here. And so here is an example of the chart list panels working. And what they do is they allow me to see a chart list here inside of my thing. Let me hit refresh. For some reason, I'm having, of course, it's giving me the old presenter's curse here. Let me just try and refresh things. Well, okay, so it's not working for me, but it probably should be working for everyone else, is the ability to pull up a chart list and see that information here on the screen. Yeah, save preferences. Yes, I'm just not, it's not working for me today, but there should be a list here of the symbols in that particular chart list. I can pick two different chart lists just by clicking on the gears, and then I can select the list that I'm interested in and hit save preferences, and those lists should appear. If they're not appearing for you, we'll get that working shortly. That's what I get for trying to demonstrate this. But that's the new feature, and it's pretty cool. And then once you have a list up, you can then do view as, and you can quickly jump to that chart list view in 10 per page or whatever.
Hey Chip, I actually pulled it up on mine. Do you want me to show everyone?
I think they know what
Okay.
What I'm talking about. It's just basically again another list similar to this, but it will be the list that you control based on the symbols that are in your chart list. Okay, so all right, let's just leave that disaster and move forward. Chart list panels on the new members page. So that's what we talked about. And the bottom line is the members page is very flexible. It's really, and can be really, really useful and heavily customized. So take some time, click on those gear icons and get it configured to the way that you prefer it and the way that it's most useful for you, the way that it's giving you the information you need to see in a glance. And you could use the chart list panels, for instance, for your portfolios, or you could use them for a watch list, or you could just use them to see particular stocks that you're interested in, so on and so forth. So I think last week Bill Shelby was in and gave a demonstration of the price alerts feature. And so price alerts are essentially simple alerts that are very, very easy to set up, very, very easy to use. You simply give a ticker symbol and you give a price value, and we will alert you whenever the price crosses that line. It's very simple to set up, and it's really intended for stocks that you own. So if you bought a stock and you say, well, if this stock ever makes it to 100, I really want to take a second look at it, maybe consider selling it. That's what a price alert is for. Again, I encourage you to check those out. Alerts are also available to you here on the members page. You can just click new alert and then quickly do a price alert. As we mentioned, alert me via the website, for instance, when a particular symbol crosses above or below a particular price, and we can also automatically calculate percent changes there for you. So price alerts are really, really useful, and we know that more people are taking advantage of them. Hopefully you are. I talked about hover charts already. Let me talk about the final thing on the members page that some people might not understand, and that is the fact that you can delete multiple chart lists now directly from the members page. This is a feature that a lot of people have asked for in the past. Sometimes they get a little frustrated. You have a lot of chart lists and you want to get rid of some. They're just junking up everything. So you can do that by coming down here to the bottom of the members page. I'm on the very bottom of the page here in the Your Chart List section, and I'm going to click Edit. And now I've got some check boxes here. And so in this case, I've got 3 sets of scan results that I really don't need anymore. And I'm just going to click those here and click delete list. Now this, you want to be sure, this can be dangerous, but you want to be sure, are you sure you want to delete the list? I'm going to hit okay. And now boom, I only have 1 chart list left. It's this one here, and the other ones are gone. And again, if you're doing house cleaning, spring cleaning, or whatever, that can be very, very useful to you. So don't forget the edit button here on the members page, the chart list area. Okay, so those are all the new stuff I wanted to show you. Let me now take you through my demos. Oh, well, obviously I'll mention Tom and Aaron and all the great work that they've been doing, the people behind the scenes to add great streaming marketing commentary and education to our website. And you can just expect more and more of that in the days and months to come. So one approach to technical trading is what I want to talk about now. Many people come to us, they come to our support queues, they talk to me at conferences and stuff, and it's so overwhelming. There's so much stuff here. I can't figure out how to start, or how to take an approach. What's a simple, easy approach to take to try and get into this? And so this is a demo that I like to give that really does narrow in, I think, on some very powerful techniques, but it's very, very simple. I think it's pretty straightforward. It's using our scan engine to find the kinds of stocks, the kinds of situations that Tom was talking about just a minute ago in his presentation, things that are in an uptrend and things that are in a strong uptrend based on momentum. So the characteristic of momentum is something that we think is a very simple concept to start with, and it's something you really want to master, I think, before you move on to other more complex or complicated things. Technical analysis has a ton of different ways you can do it. They're all great, but for somebody, again, who's just looking, how do I get started? Our advice is pretty straightforward. It stems from John Murphy and everyone else here at StockCharts. Focus on momentum first. Momentum is the quality of rising with strength. It could be also falling with strength, or falling with weakness, but rising with strength is what we're looking for. Find and ride uptrends is how you make money in the stock market. And there are a series of indicators in our website and in technical analysis that help you quantify and visualize momentum a little better. RSI, MACD, PPO, PMO, these are all indicators that you've heard Tom and Aaron talk about on this show in the past, and they'll continue to talk about it going forward. That's because these indicators are very solid, they're very well understood, their characteristics are known, and they help you visualize and see momentum. And so that's why they're really important. The other concept that can be very helpful here is the concept of relative strength. In other words, how is one stock doing relative to the other stocks? Is it outperforming? And so if something is outperforming, it's said to have good relative strength. And ideally, you want to try and find stocks that have both good momentum and good relative strength. There are several ways to go about that, but we have tried to give you a cheat sheet. We've tried to give you a little help, a little tool, which kind of combines those two things, along with a couple of other indicators based on John Murphy's approach. But mainly relative strength and momentum are what go into our scooter values. SCTR, StockCharts technical ranks. I know they've talked about that before here on the show. Won't get into too much detail, but it's essentially a number between 0 and 100 that tells you how well a stock is doing from a technical perspective. Mainly the characteristics of momentum and relative strength, they play a huge role in that number. So we can cheat, if you will, by looking at just the scooter value. And that has incorporated a whole lot of other technical analysis tools into one number. So the goal here is to find stocks with rising scooters. We want to then verify that their chart looks good, that their trend actually does look good, and that the scooter's value is an anomaly. And then we want to ride them until they weaken. We want to buy, and we want to watch them and go up and up and up, and hopefully continue. But at some point, if they weaken to a certain level, then we can sell them and move on. All the while using solid risk management techniques, which Tom and others talk about. I can't cover today. So how do you do this? Well, finding stocks to buy. Whenever you're talking about finding stocks to buy, you should immediately think of our scan engine. The scan engine is a way to screen all of the 40, 50,000 stocks in our database and find stocks that meet your technical criteria. Talking about the scan engine I could take a whole day. In fact, I have taken a whole day teaching scan engine courses in the past, but the bottom line is it's for finding buying opportunities. And I've given you here on the screen, and hopefully someone's put it in the chat window as well, the scan that I use as a very quick scan to find good stocks with good momentum, good rising momentum, and good relative strength. And you can see it's all based on the scooter. So we're looking for stocks, in this case, U.S. stocks. I've arbitrarily made sure that they're more than $5. That's just me. Those are my criteria. You can change that. I'm making sure that at this point, they're over 90 in their scooter value, which means they have strong technical characteristics, including good momentum and good relative strength. I also am now checking to make sure that their scooter value has been increasing for the past 4 days. So that's what this does. Today's scooter is greater than yesterday's scooter. Yesterday's scooter is greater than 2 days ago scooter, so on and so forth for 4 days. The final clause that I have here in my scan is that today's close is greater than yesterday's max 200 close. So it's at a value that's higher than it's been over the past 200 days. The maximum of the past 200 closes as of yesterday is less than today's close. So we're setting a new high, essentially. What we're looking for here, a new high, roughly a new yearly high. And then I'm going to rank these by scooter so that the results that come back in my table have the highest scooter value at the top. So let's see what this scan actually does. Let's run it and give it a good shot. So to get to scans, there are a couple of different ways, but here on the members page, I can click on Advanced Scan Workbench. And in this case, you could cut and paste the code that I just posted there on this thing. I actually have it already saved in my account. So here it is coming in, quickly getting in there. Now you have a choice. You can run it based on the last market close, which would be yesterday's close, or you can run it based on the current intraday update. How are things right now as of 12:30? As long as you're not really using volume too heavily in your scan, the last intraday update should be fine. Let's see. I know that I know what comes up as of last night, but I'm gonna run it as of today and see what happens. And so we're just gonna now click Run Scan.
Hey, Chip.
Yes.
I noticed that you didn't have volume in there. Does volume not matter to you, or do you kind of weed them out after you see the
volume? Comes in the next phase of what I do here, which is looking at the charts. So volume in general is something that I think is very hard to scan for. It's a very spiky kind of thing. And so I like to just find it on the charts. So here's the scan. We've run the scan results and a new window in my case popped up. Sometimes it's a new tab in your browser. In my case, it's a new window. I got 26 results, which is a great number. Ideally, you want to try and work with your scans until they're giving you on a regular basis somewhere between, anywhere between 5 and 50 stocks, whatever number you're comfortable looking at in terms of the number of charts that you see. Here I can see the individual stocks that came back. And again, they're sorted, as you can see over here, by the scooter. I told it to rank it by scooter. And so my results are sorted in that way. And this is interesting. I can also, for instance, look at the sector and industry, and maybe I'll be able to spot that certain sectors, like maybe cyclicals, are doing well. But what I'm more interested in is the chart. I'm a visual guy. This is StockCharts. Let's see some charts. And so what I'm going to do here is under available actions, I'm going to say, store these results in a new chart list. And here is the new chart list. I'm going to click preserve sort order. That's just going to number them so that I can always get them back in the particular order they are now. And I'm going to hit OK. And that immediately takes me to my new chart list. At this point, those stocks have all been snapshotted into my account. They're now fixed in this chart list as of right now. And so while the scan, if I ran the scan tomorrow, I get different results. Today, it won't do that. We're going to see my lunch later. But what I want to do now, so this is summary view. We've seen this before. It looks very similar to the scan result view we were just looking at. I want to see candle glance instead. So this is the trick. When looking at these charts, I always go first. When I'm looking at scan results, I always go first to candle glance. And candle glance gives us the charts in a little small format. We can then evaluate each of these using both volume, like Tom was suggesting, as well as the price and other indicators. It defaults to 2 months. You can have it default to other things, but that's what it will normally do if you haven't made any changes. And now I'm going to add the scooter line indicator to my charts. Hit go. And this is just to verify that the scooter line, first off, is where we think it ought to be. It needs to be above 90. That's what our scan was looking for. And second off, I can get a history of the scooter line over time. And I can also get other history information about these. So the great thing about Candle Glance is it gives you the ability to quickly weed out things that you don't like, charts that you don't like. So for instance, here's a chart over here, ASHX. It is a very spiky chart. It has very limited liquidity. You can tell that by all the dashes. Those are candles that didn't really have a whole lot of things change. We can also see that there are big gaps between the prices. This is not what I'm looking for. I'm looking for a solid, steady chart that's been going up for quite some time. Very, 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 very solid. That's just the characteristic I'm looking at. Here's where I'm bringing my own personal biases into this. Your biases might be different. You might think, wow, this looks great. Why doesn't Chip like it? Well, it's just me. You can like it all you want. I'm going to hit the trash can, though, because this is not my kind of stock. Bong. And hitting the trash can is dangerous. So the trash can appears as you hover over each chart. You see it up here, and it will turn red when you move your mouse over it. But there's no warning. If you click that trash can, your chart's gone. That makes it very quick and easy to use, but it also makes it very dangerous. So you do want to be a little careful. So another characteristic that I'm looking for now as I visually scan these charts is I'm looking to make sure that that these moving average lines, the 20-day and the 50-day, are moving up and to the right, and that they're separated and that they don't cross each other or have like here. Okay, so here's MLNX. It might be a great stock, but it's not really a great momentum play in the sense that it hasn't been going up for a while with strengthening strength. And so the moving average crosses and some other things, and then a big gap. That leads me to believe it's a news story or some other thing going on. I don't really know, but I'm hitting the trash can on that particular one. Here's another one that's gapped up tremendously. I guess there's probably a lot of gap ups today, but prior to that gap up, it was really kind of going sideways. Not too interested. I'm looking for the best of the best. I can be picky. I've got 28 stocks or whatever to get through. Why should I put up with stuff that isn't really interesting? Cray, another great stock, I'm sure, but it was going sideways before a big gap up, so I'm not super interested in that one. What I'm more interested in, let's see if I can find something that I like. I don't dislike this one. Lots of it paused for a little bit and now it's going up. It's had 4 white candles over the past couple of days, moving higher, which is good. This one is a little more worrisome. The candles are very short and there's some gappiness to it, so I'm not really going to be a fan of that one. Same with this one. I'm just going to quickly see if I can get down to some ones that I really, really like. I don't know if Tom and Aaron are paying attention to any of these symbols. Maybe there's some of these symbols they have seen or looked at.
Actually, you're going over a couple of them there. I actually jotted them down to talk about later in the chart break.
Okay.
Right.
You can show why I'm wrong. That'd be awesome. Forrester Group. Okay, so this is one that I believe, while the moving averages have been tangled, I believe this one's shown good strength in the past. No, I take it back. I must have been thinking of something else. All right. If you click on the chart itself, you'll be able to see a longer term view of the chart, so on and so forth. No, that one's not. So that one's not in my group. What I'm looking for, I would say, just looking at this particular group, and this is the first time looking at it, I'm not hating VRSN. DLTR generally looks good, and its last 2 days has had some nice volume, although currently it went. The black candle here means that it gapped up on the open and has now moved lower during the day. So that might be a little bit of a warning. So on and so forth. BRKR doesn't look too bad recently. It's challenging, though, a high that it made. So this might be forming a double top. We'll just have to see.
Gap there.
Yeah. Mm-hmm. But that's the point. So my larger point here is not to pick a stock that I love. My larger point here is to show you guys how you can pick or find stocks that you love. It's this process. At this point, you're bringing your own biases, your own approach in here. So yeah, Drive Shack. Here we go. Don't dislike that one. And then so once you do that, once you've trash canned all the ones that don't look good in candle glance, then you can do what I'm doing now, which is you can bring them into the workbench. You can start to use a lot of other indicators on them. You can really dive down. Consider the workbench to be a microscope. It allows you to really drill down into the stock and look at it in even more detail. But this doesn't look too bad. I'm going to leave people with that for now. I think that's it. Don't forget to visit the site on Cyber Monday. A lot of people are talking about Cyber Monday like it doesn't exist anymore, but it does exist at StockCharts. So keep that in mind. And then I'm getting some reminders to remind you about ChartCon 2018. We've announced that. I was here a little while ago to announce that. Really looking forward to that next August. There'll be more information in our newsletter. There'll be more information on the site, and there'll be more information on the show about how to sign up for that. We'll be doing it again virtually this year or next year. So you'll be able to watch it through your computer or see the recordings, that kind of stuff. Should be a lot of fun. Anyway, with that, were there any like killer questions that came in? Did I?
There was a question about the Black Friday sale, so you answered that right now. One of the ones was, how do you use a permalink for saving your RRG charts?
So when you click on permalink, what that does is that reloads the page, and there's a URL. Then the URL at the top of the page where your browser is can be bookmarked. So you just use your browser bookmark feature.
No. I think that was really the main one. They did ask about candle glance chart styles and how you get your own chart style for your candle glance.
I'm going to leave that up to you.
I did answer it in the chat box, but for anybody out there who's not watching this live, you just set up the chart the way you want it in your candle glance and then save it. Save the chart style as candle glance.
Yeah, the only other comment I had, Chip, and I don't know if I was the only one watching and had this thought, and I know it's kind of crazy, but when you were going over Drive Shack, the only thing I could think of was the B-52s and that song Love Shack.
Yeah.
Like Shake Shack.
Yep.
So anyway, sorry.
They're asking when they can register online for ChartCon 2018. Everybody's already excited to sign up.
So that's great to hear. We don't have the registration page up yet. We will have it up soon. Keep tuned.
All right.
Yeah, looking forward to that. We've done that. Well, typically we try to do it every other year, and it's been a great. It's been a lot of fun. We've had folks out there to join us. It's great mingling with folks that that support us and so forth. And it's, for me anyway, it's been a great group of people to get together with, and looking forward to the next one next year as well.
Yeah,
Absolutely.
All right. Well, I appreciate you coming on, Chip. I know we're going to try to do this everything stock charts every week, and try and keep everyone posted on some of the happenings at stock charts, not just the things that have actually taken place, but maybe some of the ideas and some of the things that you're looking at changing and so forth and upgrading. So anyway, great to have you on here today.
Well, great to be here. I hope to be back every now and again. I hope showing off new features of the site, answering people's questions. I have no problem doing it.
Awesome. Thanks again. Okay, so there he goes, president of StockCharts, Chip Anderson. Always great to hear from Chip and Bill Shelby and Grayson Rose as well, in letting them share some of the things that are happening at StockCharts, keeping everyone updated. So again, appreciate that. Let's see, we got a few minutes here, and I know we wanted to go over some chart breakouts, and Chip just gave me all mine, so I don't know what you have, Aaron.
well, I had written down, let's see, I think I had about 3.
Okay.
So since I haven't had my screen up here for a while, I'm going to go ahead and do it.
Go ahead.
All right. Oh, and here is the candle glance, just for anyone interested, since we didn't do our second market update. It looks like everything's pretty much consolidating right now sideways after a really impressive morning with rallies for everybody. Although I see the Russell 2000 is starting to deteriorate here a little bit rather than move sideways. So I have them. I actually notated and saved some. Okay. And my chart list. There we go. That makes it a lot faster. Okay. So let's see. Hormel Foods was one that I saw with a big breakout, a gap up. And I've set up these support and resistance lines. And, right now we did get an intraday high that broke out above this area of overhead resistance, but it's now currently underneath. So, I'm not sure how that's going to finish out, but it does look like a shooting star in the making, just looking at that high-low bar. Let's see, MDT. And I think somebody even requested this one. I can't remember if we've talked about this one before, but we did get a breakout from this symmetrical triangle. And, if you remember from chart patterns, we're looking at symmetrical triangles that they typically are continuation patterns, but here's an example of when they're not. So you can see a really nice PMO bouncing off after a bull kiss of the signal line. And the only concern I'd have right now is, this is an area of overhead resistance that does need to still get taken out. I had noticed the reason I put that resistance line in was really because of these two tops. And I know a couple people are like, isn't that a head and shoulders? I think it was a head and shoulders, and it executed. It didn't quite get to the height of the pattern on the breakdown, but it executed pretty much as expected. And then I think I had one more, Regis Corp. And this was actually one of my Monday setups that I didn't pick, unfortunately. Although I understand my pick is doing fairly well today. So we can see a PMO buy signals come off. Look at this scooter is still very strong. And yesterday when I looked at it, one of the reasons I didn't pick it, it was already pretty much heading up on this rally after hitting that support. So I didn't want to chase it at all for a Monday setup, for a really short-term investment idea. But for the longer term, intermediate term, I did like this one, which is why I shared it. And we are seeing that breakout continue. So those were the three that I had.
Okay. Yeah, I think Regis, that RGS looks pretty good. Not just with the momentum building, but having that breakout, across the near-term tops, but then also going back even toward the end of 2016, early 2017. So I like charts that have multiple tests of a level and then finally make the breakout. And I'll have an interesting one here for you in just a second. But first, I wanted to go over, since we're talking about chart breakouts, I'm going to start with the Russell 2000, because even though we are off that high and we are still starting to show a little bit of weakness intraday, this was a chart that we had talked about recently, where the Russell 2000, I know I'd read a lot of articles and folks were starting to get a little nervous, because for about 5 or 6 weeks, you can see that the Russell 2000 was moving lower and was significantly underperforming the S&P 500, which has, stayed fairly close to its recent highs. Well, one thing you have to understand is Russell 2000 tends to be much more volatile. The folks that were looking at the underperformance over a 5 or 6 week period, I think maybe had conveniently forgotten about the massive outperformance that the Russell 2000 had in the 6 weeks prior to that. So, any stock or index that's had a massive move to the upside, you've got to give it a little bit more to the downside. I mean, you've got a lot of folks that were chasing near the top, and you start seeing a little bit of weakness and then a little bit more, and then all of a sudden the sellers start to really start to pick up. But I think a couple of things here. Number one, with the Russell 2000, with that advance, if you use the Fibonacci tool here at StockCharts, you can see that the very first Fibonacci retracement level, which is 38.2% of the advance, would have brought you down to 1451. And that low 5 days ago was at 1454. So from 1517 or whatever this high was, all the way back down to 1451, we almost got there. And then all of a sudden we've had this huge move up, which is starting to resemble some of what we saw before. So I think the Russell 2000 is looking pretty good here. The other thing on this pullback is notice that the breakout over the July high was right about that 1451 level as well. So I think this pullback increased the reward to risk entry for a lot of folks, and many took advantage of it. And we've seen the Russell quickly move back. Today's earlier high was the all-time high, though, on the Russell 2000. So if we strengthen into the close, we're going to have an all-time high close. If we don't, and we leave that tail up there and we pull back to say 1510 or something at today's close, it may set up some consolidation, more consolidation, perhaps maybe off of this uptrend and this first low. Maybe we come back down and put in a higher low to begin to establish maybe an ascending triangle or something like that. So I do think today's close will be important, but I thought the Russell 2000 breakout was certainly worth mentioning. And then I've got a couple of charts that I wanted to just bring up. Here's one that has not yet made the breakout, but I have got this one on my radar. MTDR, Matador Resources, kind of aptly named, or Matador, waiting for that. I feel like the market makers kind of have their little cloth hanging out waiting for the bull to charge through. But anyway, if you take a look at this chart and we go back on a weekly basis, you're going to see that the recent high, look at all the times over the past 4 years that this stock has tried to get through $30. And just recently, last week, when we were looking at this high, got up to 29.5. On the daily chart, it may not look like much, but when you go back and look at that weekly chart, you know that we were coming up upon some very significant price resistance going back. So if you see the stock above $30, you know at least that it is making a significant breakout. That should be accompanied by some very heavy volume. Anybody looking back at that chart and seeing that overhead resistance would sell. So to get a breakout's probably going to, at least a meaningful breakout's probably going to need some heavy volume to accompany it. So that's one. A couple that Chip mentioned that he didn't seem to be too interested. Maybe I shouldn't say this. You might have the show by yourself going forward. But I actually like, I think this stock right here, Mellanox, I think Chip was looking at it saying he didn't like the sideways consolidation, but I actually think it's been basing for quite a while. And that breakout, look at the volume coming in. I like stocks that make the breakout on heavy volume. So that is one, especially after a basing period. The other one that he had mentioned was Cray. And Cray, same kind of a deal where you got this sideways consolidation for months. Now all of a sudden volume's picking up and we're getting the breakout. And the last one I wanted to mention was VeriSign. This one is just more of that standard move up, pull back a little, move up, pull back a little, move up. But we had based here for about 5 or 6 weeks near the 110 level. And you can see the volume down here has really picked up on this move to the upside. I think this is too stretched. I like to see a pullback, but I couldn't be any more interested in a chart than I am in this one right here with a MACD going straight up. Great price action, super volume. Big problem is that the RSI now is at 75, and I just don't buy, I don't like to buy stocks when they are so overbought in the near term. But having said that, I think it is time to move on to the 10 in 10.
Indeed, it is.
Let's do this.
Right. Let's see. What did we say? Our first one would be ETM, Entercom Communications.
All right. ETM.
This actually came to us via email. So we do read your email.
I like the improving volume that's accompanied this move to the upside, but we are in a downtrend. And I think before we can really begin to establish an uptrend, we need to take out that 1230 area. So I don't know that I think it might be a little early to jump in here. If you really believe this is the start of an uptrend, maybe a pullback to the 20-day moving average you could consider. But I really want to see that prior high taken out, because at that point, you start to get the feeling that this downtrend is over and that now we've started an uptrend. We pull back to a higher low and then we break out again. That's what we're looking for. So I'm not quite ready to jump on board here, but I do like the improving volume trends, and a breakout above 1230 with increasing volume would be bullish in my view.
All right. Number 2 is TDOC, Teladoc. I like it. The PMO it probably would have come up on my scan because the PMO is rising out of oversold territory. So,
yeah, I think this one, it's looking good. It's trying to negotiate a downtrend. So the first thing I would note, number one, is you got some pretty good volume. Actually, I would even go back into this level right there. That was the first reaction low after this huge move and breakout above this prior high. So I would be looking at this area to be the major support level. And we did touch the top end of it right before we started to move higher here. My only concern in the near term is the trend line off of the top here. So if we draw a top or connection there, you can kind of see that intraday it looked like we were making the break, and that's drawing lines using the tails. I get this question often: do I prefer the tails or the candle bodies? I actually prefer the bodies. So for me, it's that. So right now you can see right here, we had a false breakout with this tail and we went down. Well, it's kind of hard to really call this one because this was the second point in the trend line. But here right now, unless we strengthen later today, it looks like we are leaving a tail to the upside once again and possibly going to, pull back a little bit off of that. So I think the volume is telling me that we're probably going to get this breakout. Keep in mind, too, we're talking about a stock that's been trending higher, and all of this has been consolidation. So I expect it to go higher. I just don't want to enter here until I know that this trend line has been broken to the downside.
All right. The next one we have is one we haven't looked at. A lot of times we get repeats, but this is FCEL, Fuel Cell Energy. And I see a reverse flag, so I'd be a little concerned, and the PMO is dropping.
Yeah, I'm when I see a stock like this, I'm looking for a reversing candle at a major support level if I was going to get interested in it, because I agree. First of all, the problem is that you've got a trend line. The stock looked pretty good here for quite some time. Nice little trend line there. And the breakdown that we saw is on the heavy volume, and it's a big red candle. I mean, there was a lot of selling taking place. So that, we lost a gap support level. We lost the 50-day moving average. We lost the MACD centerline support. This was not a good candle for this. So if I was looking for entry, it would not be until what I think is major support, or at least significant support, which is probably down just below 140. That's where we had multiple tests in August and September. I would imagine we're going to head down to that level. And for me, the trade would be between price support and now the declining 20-day moving average. So right now you're almost in the middle of it. But if you pull back closer to support, especially with a reversing candle, then maybe the reward to risk would look better at that point.
Okay. Next one we have is MGM.
All right. I like the space, like the gambling stocks. This one hasn't broken out. Many of the others, like Wynn Resorts, Las Vegas Sands, we've already seen breakouts. So this one, on a relative basis, I would say is an underperformer in the space. But I still like the chart. I would say that the recent low here, which actually held the breakout on the high that we saw back in January, and multiple tops, I think pretty clear that we're going to need to get through about 34 and a half before we're really into breakout territory. And you want to see volume coming in on that move. But I do like, over the past month or so, this move to the upside, kind of holding on to that rising 20-day moving average and now holding above it. But we have to negotiate 34 to 34.50. That's going to be the upcoming resistance to watch.
Okay. See, next one I have is ALSN, Allison.
Yeah, this one actually, there were a number of stocks. PCAR was one I got caught in. I was on the long side, and the stock ended up getting stopped out. And the news was, this is in the commercial truck space, Allison Transmission, along with PCAR, PCAR, PACCAR, I guess. And there are a couple others that I was looking at as well. All of these stocks, this gap down and all that occurred at the end of last week, this was all based on Tesla's announcement that they were going to manufacture a commercial truck. And so once, it's kind of like Amazon moving into your space, it's the 800-pound gorilla. And so that was the big move to the downside. I would like to see that recent low holds. So if I'm in this one, or if I'm looking to get in, I really want to see the 50-day moving average and the price support hold. And so looking at it, that would have been one level that we barely went through. You can see there was probably a little bit right in here as well with all of these tops. So I'm going to say pretty big price support around 39 and a half. We went into that zone, hit the 50-day. The 50-day now is at 38.89. I'd have a pretty tight stop. I think if the volume picked up and we lost, say, 38.75 on the close, I would be out. And the thing is, this looked really good. Coming off of this breakout, you can see the volume had picked up, had a big black candle. So that told me that maybe we were a little bit overdone in the short term. So maybe pulling back to this 20-day was no problem. But with that news with Tesla, that's what created this additional weakness.
Okay. Next one I have, number 6. It's gotten a few requests here, is EWZ. I also noticed it was pretty big on the ticker cloud.
Yeah, it's recovered nicely back above the 20-day. I mean, that's the big thing for me is when a stock breaks down in the short term, and I think it should be going back up. I want to see it get back through that 20-day. Failures at the 20-day bother me, and so I'm going to be looking here. There was one level, right about there. You can see pretty much a double top that we finally got through in September. Went back down, nearly tested that level, and then we fell apart. Not only are we getting back through the 20-day, but we're also getting back through this price resistance area. You can see a nice little cross here on the MACD above the trigger line. So I think things are improving. If there was maybe one other thing that would bother me a little bit here is just that it might be in a down channel. And if I can get that, there we go. So I'm looking at something like this. And if it lines up right there, so all you have to do is I hit the command and the left clicker at the same time, and you can drag the line. So you keep the same slope and see if there's a channel in play. So there's a possibility of this channel. Obviously, if we get back through the 50-day, I think that possibility is over. And this would look more like maybe just a pullback that we've broken out of and started to rise again. So I'm right on the fence right now on EWZ. My gut feeling, because I believe that we are in a global bull market, is that this is going to continue to go to the upside. And maybe if you wanted to just be careful, keep a stop at that rising 20-day. The 20-day is just starting to turn back to the upside. That should now hold if we're rising again.
Okay, so number 7 is Skyworks Solutions, SWKS.
Yep.
Reminds me of Sealed with a Kiss. I don't know.
Yeah, I like this one. I like the pullback back to price support. I like the fact that it's starting to round a little bit. So I'm looking here and then kind of maybe at that level. You can see all of this kind of this back and forth action seems to be taking place in this 109, 111 area. I actually would look for it to resume and get back up to about 116. I would not be surprised to see this turn into a cup here. But overall, I like the sideways action for a few months before getting the breakout. And on this breakout, you can see that the volume had picked up, which I like. So maybe, if you're looking for a stop, maybe it's the 50-day. We had a couple tails down here. Definitely a move back below the 50-day, though, loses recent support. So I would be careful there. Otherwise, I would look for this to resume its uptrend.
All right. The next one I have for you is JCAP, Jernigan Capital. I'm seeing a short-term double bottom, and the PMO is turned up.
I'm sorry, I missed that ticker. What was the ticker again?
Oh, sure. JCAP. Yeah, PMO just turned up above the 0 line, possible short-term double bottom.
Well, first thing, I wouldn't touch it because of the volume. It's just not a very heavily traded stock, so that would probably eliminate it for me to even consider. I like more volume, more liquidity. You got a double top that was in play, and then we executed to the downside. Let me show you that. So here's your double top, right at about 23.75, and then the lows in between here should have held on this pullback. It did here with the hammer, and we rose, but then eventually we broke back down. It's starting to show so many mixed signs. It comes back up above. Maybe we draw one more line here that if we could get through. I don't know. Again, the volume would keep me out of it. I think it's trying to make a move, but even some of these big red candles have heavier volume. I think for me, I would avoid it.
Yeah, it looks to me like the neckline is lining up with some pretty strong overhead resistance. So I'd be looking for that breakout, but it's not there yet. So
yeah, it's got some more work to do.
Yep. Next one is one of our favorites because we love the symbol is MOMO, MOMO.
All right. Well, it looks like it may have broken I'm going to look at a weekly chart here and just see if this is more of a wedge or not. Yeah, I could draw a wedge here because it made such a huge move up prior. And so I'm looking at this being an uptrend. Mm-hmm. And if I draw this trend line right in here, you can see that these tops, we pulled back, made one more push through, very nice volume on the breakout. And this is actually a wedge back down to price support, which is kind of interesting here. So I'm going to look at that, and then maybe from this low over to here, and you can kind of see this piece of pie squeezing. That's what these wedges look like. So right there. So I'd say a breakout above 32.5 with increasing volume would suggest that maybe we're going to make another trip back up to that 45. So actually, I think this one's kind of an interesting looking chart.
Yeah, looks pretty good. All right, our final one is NSA.
Right, NSA. Yeah, I mean, it's got a nice uptrend. I mean, this is kind of what I think Chip was just talking about. You can see off the bottom, mid-August, we bottomed and have been rising ever since. We've gone from $21 up to about 26.5. I don't really see anything horrible here. I mean, the MACD is kind of stuttering a little bit, but so far, with the exception of one day, we have held above that 20-day moving average for the last 3 months. So I'm going to just say, if I was looking at this chart and wanted to make notes, for me, it's just I want to watch that 20-day moving average, because that has been, as you go back and you look, since late August, early September, that has been the key support with the exception of one day. And even that day, when I looked down, the volume wasn't very heavy. So I don't know what happened that day, but that seems to be an outlier. So I think that this the chart still looks pretty good. Watch that 20-day moving average.
Perfect. That completes the 10 and 10. I have to say, I'm looking at that chart. I see a bull flag too. So I think that's pretty good.
Yeah, there's a little flagpole here over about 6-7 trading days. And then I think what Aaron's referring to is all this sideways action here.
Yeah, I'd even look at today's as a breakout, because it's, the candle body's higher than those others.
Well, the day's not over yet, though, and the volume.
It is true.
So we'll see whether or not we can confirm it. I'd prefer to see some more volume on the stock, to be honest, to confirm a breakout. But overall, I mean, the trend certainly is higher. It looks good.
All righty. 10 and 10.
Or 12 or 14 or whatever it was.
Somewhere there. Okay, well, I think I'm going to get ready here for our market update.
All right.
Just want to make sure I'm on a good, if I'm on the right place, I need to be. All right, here we go. Okay. I still have Momo on the screen here. Head back to our member dashboard.
One of my favorite ticker symbols, Momo.
I know, right? I do like that. I don't know.
I get a kick out of some of these ticker symbols.
Exactly. So here we go. I was showing you the Pro Control Center. This is where I get to those candle glance charts. And again, we had a great morning, Tom. I mean, we had straight up movement here, but we're now seeing, it looks like the intraday highs have been set as we consolidate sideways at this point. Russell 2000, it started, instead of consolidating, it's started to trend lower, but it looks like it may be trying to make a move back up toward intraday highs. We can see that Treasury yield is down slightly, reading at 23.68. UUP formed this double bottom after a really rough morning here, down to the intraday lows around 24.40. But it didn't execute at all. We're just now, we can see it's fallen apart and we're heading back down toward previous lows. Commodities, USO rally in the morning, decline shortly thereafter and sideways since lunch. So not much interest there. We've got a gap up on gold, moving mostly sideways. VIX is staying under the 10-point level here. We're at 978, and that does suggest there's some complacency, possibly, definitely bullishness in any case. Advances leading declines. I'm going to take us to the member page, and let's look at the major movers right now. S&P 500, GE, Micron, Bank of America are most active. The big movers right now, JEC, and here's that wonderful hover function so we can see what actually is happening, and you can see really nice breakout. I almost picked that for the chart breakouts, and there's MDT, which I did pick. You can see that symmetrical triangle and the move outside of that. Let's go ahead and look at the scooters, though. What is happening as far as our big scooter movers? And I know Chip showed you some information about this. This is a great place to get all that information all at once. Scooters, large cap, top up. So who are big movers? JEC, which is the top of the movers as far as percent change. So not a surprise. One of the great ways to look at all of these at the same time, I'm going to pull up the candle glance so we can see what's been happening over the last 2 days anyway of trading, so we can get an idea about those breakouts. Something looks interesting, I can click on it. That concludes the final market update.
Okay, well, we're going to get into the what would you do here in just a minute. But first, I just wanted to go over and make sure everyone realizes that we are now in record high territory on the Dow, on the S&P 500, and on the Russell 2000. I didn't look at the NASDAQ yet, but I'm assuming probably there as well. But the first thing I wanted to show is on the VIX. When we bottomed 5 days ago on the S&P 500, I'll pull the S&P 500 chart up so you can see that. But right here on this tail to the downside, after we had sold off for 4 or 5 days, and then we kind of recovered back a little bit, we're still, down quite a bit on that particular day. If you look at the volatility index, that's where we had this long tail, and we came back down and left that long tail to the upside. And after a pretty significant rise in the VIX, many times that will be the bottom, at least in the short term. And we've seen that on many occasions. We could go back here to October. I think this was October. I think that's the 25th when we went up here like that and then reversed back down after competing with some of the previous highs back in August. And if we take a look at the S&P on October 25th, we will see that that was the day that we put that tail end down at the 20-day moving average and reversed off of it. So anytime, that's one of the things I look at when the VIX is starting to rise, is I try to watch for these big reversals in the VIX. Because if you just understand what the VIX is, it's the expected volatility of the market going forward, and it's calculated using premiums, option premiums on the S&P, but only going out, I think, 1 to 2 months. So you're looking at short term, what the premiums are on those options. And if the market's going to go up, the premium on these options tends to go down, because anytime we're in an uptrend, volatility just completely goes out of the equation. We get these S&P 500 moves where we go up 3 points, and then we come down 2, and then we go up 6. And it's just very boring, methodical movement to the upside. Whereas when you're selling, the selling tends to happen very quickly, and the volatility expands, and that VIX reading starts to skyrocket. But when you get these moves to the upside and you see these huge reversals, especially like in this case, to me, that was pretty significant, because we were moving up to a 2-month high intraday and then completely fell apart heading into the close. And sure enough, look at the VIX since then. The VIX completely come back down. The market's breaking to all-time highs. The S&P 500 just hit 2,600 for the first time in its history. We're at 2,598 and change right now, but we got up as high as 2,600.11. The Dow Jones, which I believe the previous high was at 23,602 over here, hit 23,617. So I don't know if we're going to close at an all-time high, but at least on an intraday basis, we did see it. And we talked about the Russell 2000 earlier. And let me pull that up. Right now we are at a record high close if we were to close here, but intraday, clearly we've taken out that high. So seeing some pretty good action. Let me pull up the NASDAQ, because I hadn't looked at that one to see if we also have the high. Yeah, that's not even close. We gapped up easily above the prior highs. So all of our major indices are in record territory. Earlier in the show, I looked at the XLF, the XLI, which to me looked like they had done what they needed to do. They went back down to the 50-day moving average. Their MACDs have hit centerline resistance. And in the case of the XLI, we actually went below. And so I think the MACDs have been reset in a couple of key areas. While those two areas struggled, we saw consumer discretionary pick up. Of course, technology's been doing really well. Energy over the course of the last month and a half has certainly picked back up to the upside. Healthcare still doing okay. And utilities, until just recently, utilities were doing extremely well. So my point is, when I look at the market, I still see money rotating into the aggressive areas. Even the XLY, which I didn't cover earlier, but I'll pull up real quick. You can see that the triple top that we had from early June, and then July, and again in early October at about 92, We have cleared that. And look at this move. This is starting to look almost parabolic. Each day we're seeing consumer discretionary move higher. And of course, one of the reasons we talked about was the retail stocks. Now, we haven't gotten that definitive breakout. Looks like yesterday we tried to break above 42, actually did close there just briefly, but we were a little overbought or almost overbought. Pulling back down, we might want to watch maybe for an island reversal. Another gap down tomorrow would not be good news here because it would leave these three on an island right at price resistance. But if we see the XRT take back off again to the upside, I think that would be extremely bullish for the XLY. And it's actually pretty bullish to see that sector continuing to move higher, even though retail is pulling back today a little bit. So anyway, I don't see anything that's bad. And I respect Art Cashin quite a bit. He's been on the floor of the New York Stock Exchange. He's on CNBC, one of the guys I really like to listen to. And he's starting to grow a little bit concerned about the market because of lack of breadth in this move to the upside. But I like to follow the sectors because I think when the market is rolling over, I think money starts to rotate, becomes much more defensive. And instead, what we're seeing is really recently money's been rotating away from treasuries. Money's been rotating on a relative basis away from consumer staples and more toward consumer discretionary. And you got money rotating on a relative basis away from healthcare and even recently now, again, away from utilities and into some of the other areas that I talked about, some of the aggressive areas. So it's hard to get overly bearish. It's hard for me to get bearish at all, to be honest, with everything that's taken place. And then again, knowing the time of the year. I'm not saying that we can't top in November or December, but history tells us it just typically doesn't happen this way. So anyhow, that's all I had. I know we're going to get into the what would you do. I'm going to go ahead and pull the chart up.
Yeah.
There was a question that came in about this stock, I think, over the last day or two. So figured it'd be timely for that as well. Guideware Software, GWRE. Looking at this chart, what would you do? Would you buy? Would you sell? Would you hold?
Yeah, I have the responses. It's pretty much, would you buy or hold it? Or would you sell or short it? Or would you just leave it alone?
Yeah, and there's a couple of things that I'm just going to kind of wait to see if I get any responses. A couple of things that interest me about this chart. So I'm going to kind of pull up the chat room as well and try to see if the comments. Now, let's see here. But software itself, I mean, the group is doing very well. I pulled that chart up earlier today. I think I pulled it up. Or maybe I stopped at semiconductors. Maybe I didn't get into the software, but software is doing well today. And all the key areas of technology are doing well on this breakout. So just, it's kind of like we have that, the current, we're kind of swimming with the current, if you will, when you're in any of these technology stocks, because technology has been unquestionably the leader over most time frames. When you look back, over the last month, 3 months, 6 months, 12 months, and so forth, this has been a group, an area of the market that has continued to provide us leadership. So any of these stocks within these industry groups that help to lead technology higher would certainly, you can make a bullish case for. But I don't know. You want to give your opinion, or we want to see what everybody is saying at this point?
Well, I've asked everybody to put in the chat box to write GWRE and then let me know, would you be a buy, hold, short, or sell, or leave it alone? So we've already gotten a few buy or hold it. If you're not buy it until a pullback, I mean, we're already getting some pretty interesting replies. So I'm going to go ahead and I will share my screen. And you can see what I think of it, whatever you think of it.
Okay.
Okay. So I did tell everybody that we're not going to agree early on, but looking at this chart, one of the people said exactly what I would, my response was if I owned it, I'd hold it. If I'm looking for a buy, I would kind of wait for it to either break out or pull back a little bit. But that is not the rules of the game. It is buy/hold, short/sell, or leave it alone. So I'm going to say that based on the positivity of this chart, I would be a buyer or a holder at this point. We're hitting this overhead resistance. This is where I put in original resistance. And now, it's an OHLC bar. And I know, Tom, when you do your resistance levels with your candles, you usually use the closing prices for your support resistance. I typically use the top of the OHLC bars. That's just my preference. So I'm looking at it. I've got a nice PMO buy signal. I have rising bottoms on the PMO with price. So that's a nice bullish confirmation. I got sort of the fake out, bull kiss where it came down, tried to fake out and get people into the selling mode, but then it immediately switched up, left some people holding the bag, and has moved up. Scooter is super strong, so I like that. And I did take a look at the weekly chart too, and that was encouraging as well. We're in a really nice, strong rising trend channel. You could make a case for a flag here when you look at it in the thumbnail, and that flag executed. And we're holding on to the support right here at the top of the flagpole. So I look at this as a flag breakout. This could be a decent intermediate term purchase. Like I said, personally, I would want to see that daily resistance broken and then a pullback. But given the rules of this game, I would be a buyer. And look at the PMO. It tried to get that fake out bull kiss, and then it's starting to head back up. So, I mean, I like it. So what is it about this stock that you don't like?
All right. Well, a couple of things. The big one, and I was looking, I'm following in the chat box, trying to see if somebody says it. If they did, I didn't catch it. But I've been trying to hold off and wait. What is it that would keep me from buying this stock? And I don't see it yet. Earnings. Earnings are coming up November 29th. So that's the big thing is the problem is it's right up at resistance, trying to break out. I mean, that would definitely be a good thing. So if I pull the chart up here, the other comment that I was looking for, and there were a few that made this comment, is that these inverted hammers normally are not a good sign. You can see the one that occurred back in early November. Now, we don't know what this candle is going to look like by the end of the day, but right now I don't like the fact that it got up to 83.52 and currently it's at 82.49 with the market up near, its all-time high. So this stock has made a nice move. It was actually a setup of mine, I think a couple of weeks ago, somewhere, one of these 20-day tests, I think. But anyhow, so I like the stock, and even the MACD looks good. I think someone commented that they really like the MACD. I agree. But I can't buy a stock knowing that earnings are coming out in 6 days. Just because if it fails here and just has a normal pullback to the 20-day moving average, if I'm not going to hold into earnings, I'm just setting myself up to sell with a loss. So that's why I wouldn't buy it. So it was a little bit of a trick question because I agree with you, Aaron. Actually, I think this one looks really good. I just don't want to get in, 5 or 6 days ahead of the earnings report coming out. And I don't like today's candle, by the way. But as I said earlier, we don't know what this candle is going to look like at 4 o'clock this afternoon. We may see this stock back at 84 on the close, breaking out with a hollow candle. It may look, really bullish, in which case I would expect some more strength in the short term. So those are just a couple of things in the near term that bother me about the stock. But overall, I do like it. I am bullish.
All right. Well, here's the tally I'm getting. Basically is people are either buyer holders or leaving it alone, waiting for something more to happen. But we didn't get anybody who full on said, yeah, I'd short this. So.
Yeah. And I mean, if you want to hold into earnings and take that risk, that's fine. That's just not something I do. A stock that I had one of the stocks that I had set up, I don't know, a few weeks ago was PANW, when it came down here and put in this tail right here at price support, and it's great, and it started to bounce, but I wouldn't have held today, and yet the stock is up almost 6%, down quite a bit from the earlier high, but obviously, and I haven't seen their earnings report, but obviously their earnings must have impressed traders, maybe beaten Wall Street top and bottom line again, because that's what happened a few months ago when we got this gap up. So overall, I like the stock, I like the sector. the industry group, but I just don't like holding into earnings. And this one was an example of the benefits that you can get from holding into earnings. But then there's always, the ones on the flip side. I think Campbell Soup missed today, and I haven't looked at that chart, but I was going to pull that one up as well. Yeah, this one had been in a downtrend. This is why technical analysis is so important too. Campbell Soup has now missed, I think, 3 of the last 4 quarters, and the market knows it. Goldman Sachs and those companies, they send their analysts out to these companies. They find out the scoop, and they don't announce it. They don't get in front of a microphone and tell you, but if you follow the price action, it's pretty obvious to me that they've probably been getting their clients out for several months. And knowing that you're in a bull market, this is more defensive stock anyway, not really in favor. But look at the reaction on this one today, down 8%. So they go both ways. And even, this one's not breaking down, even though they came up well short of earnings estimates, not breaking down. But keep in mind, it's been going down for months. So a lot of this, I think, was already built into the stock price, just like sometimes we get these stocks that look really good going into earnings. And I'll make statements like, yeah, I think they're going to report great earnings because the stock's been going up for the last several weeks. And it seems like everyone's bracing for a great report. But many times you'll get the movement to the upside on the rumor, and then you'll see the selling on the news. I think Applied Materials was an absolute perfect example. Look at this stock. Had a beautiful move up. And of course, semiconductors have just been on fire throughout 2017, but a beautiful move up. Look, the earnings were awesome. It gapped up, and basically that was the end of the move, at least in the short term, as it came back down. That open up there around 61 is going to provide some resistance for Applied Materials going forward, I would suspect. But anyhow, I know we got just a few minutes here. You got any final thoughts?
No final thoughts. I would just say that I did get a PMO sell signal on the NASDAQ yesterday that I, of course, reported on. And of course, somebody tweeted to me like, but I'm going to be watching those the PMOs on my DP scoreboards. Every one of them are now on sell signals. I know that the NASDAQ barely got that sell signal. We're talking thousandths of a point. So I'm going to be watching that. Of course, I'm sure that we're going to get a scoreboard change for the NASDAQ 100. PMO momentum with today's shift and rally, there's no way that sell signal is going to hold. And I think we're getting close on some buy signals, PMO buy signals for the S&P 100, 500, and the Dow. So that's what I'm going to be paying attention to over the next day or two.
So what's the PMO sell signal that you got? Is that based on your daily or is that a weekly?
That's on the daily. So in fact, I could just bring that up really quick. I know our producer's like, no, not another chart. So let's see. I have it here in my chart list. And yeah, I'll show you the NASDAQ 100 right here. Okay. So there is the sell signal that came in. You can see it was just barely a touch on the signal line, but I have to report it. I mean, it came through, it was negative, but now obviously we're going to be moving that right back into a buy signal. I was a little concerned about a possible double top. Well, obviously that's not the case right now. So looking pretty good. And then, like I said, I'll be watching to see the PMO on the others and what's going to happen, because you can see the Dow hasn't quite managed to turn its PMO even back up. And looking at the OEX, same deal. It's just now starting to tick back up. So, the large caps are still having some difficulty. So I'm going to be paying attention to see if these PMO bottoms are going to hold and what that's going to mean for the markets. And, you can see right now the rising bottoms trend line is causing some issue as far as overhead resistance.
All right, I'm going to be watching the 10-year Treasury yield. I've been watching it. It's kind of squeezing in that triangle I showed earlier. So we'll see whether or not we get that breakout. I do want to mention I will not be here tomorrow and on Monday. I'll actually be traveling out of town. But tomorrow we do have Mark Young. He's with wallstreetsentiment.com. He will be joining Aaron. I'm sure they'll have an interesting discussion about sentiment. Again, no Market Watchers Live on Thursday or Friday of this week. But we will be back on Monday. Greg Schnell will be subbing for me, and he'll join Aaron on Monday's show. So I'm sure you'll get a nice update on some of the commodities that Greg follows, and I'm sure it'll be an entertaining show. with Greg and Aaron. And then next Wednesday, you can join me. I'll be providing a segment on trading strategies with the MACD. I'll show you a little bit about the MACD, how I use it, along with some of the moving averages. At least give you a little bit more flavor of how I look at the market. And then Friday, December 1st, that's next Friday, Julius de Kempenaar will be back, and he will be discussing the RRG chart, so you don't want to miss all of that. So make sure you have your calendars marked. Thank you all for joining us today. As you leave, please complete the survey. We'd love to know what you thought of the show today, and provide us comments about maybe suggestions for improvements in future shows. We'd love to get those as well. As a reminder, Market Watchers Live airs on Mondays through Fridays now, 5 days a week, from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everyone. Happy Thanksgiving. Happy trading.